Good morning, everyone. Welcome to Pre-Market News and Views by Money Stocks. Today is Monday, July 8th, 2013. Thank you all for tuning in. Let's jump right into the charts here. We're going to start off with the usual S&P 500 E-mini futures. What traders will see is that the futures are higher by 9 points. This move higher comes even as the Asian markets got pummeled last night. So if you take a look at the Asian markets over the course of the evening, the Shanghai index, which is one of the most important that anyone can follow, is down 2.45%. The Nikkei 225, which really rolled over hard at the end of the day, was down 1.4%. The Hang Seng index, which is Hong Kong, that was down 1.3%. So it was a pretty ugly night in the Asian markets overall. But one thing we will say is that the U.S. futures are holding up very, very well this morning. Now, I would be a little bit careful here when you see Asia roll over. The markets are getting a pretty sizable bid, which is a little bit unusual. Now, there is some economic data or some, some words coming out of Europe, and that may be helping things a little bit. European markets are all flying sharply higher today. You have the German DAX up 2.47% ahead of the opening bell, which is a little bit unusual. That's a big, big move there. But that's what we are seeing. You have very, very strong moves in Europe this morning, and that is certainly helping these markets. So these markets are very, if you ask me, mixed up and confused, but that's what we've been accustomed to seeing. As soon as a central banker comes out and they say something positive, the markets react and they catch a big, big bid. The market just loves money printing. They love liquidity, and that's really what it comes down to. But I would tell traders today to be a little bit guarded, be a little bit careful here, regardless that the futures are higher. We're coming back from a holiday. A lot of times that will just be a little bit of a holiday hangover, and it may not last all that long. So I would think that most traders, especially experienced traders, already know this, and that's what you have to watch for going forward. This morning, it looks like we're catching a pretty sizable move in gold. Gold is catching a big bid. That is up $23 to around $1,236 an ounce. So there is a sizable move higher in gold this morning. If you take a look at the GLD, what you will see here is that it's steadily moved up really all morning long, and you're sitting right at the 119.45 level. The GLD did close at 118 on Friday, so Friday's close was pretty ugly, and you're getting a decent little pop, about $1.50 in the GLD this morning before the opening bell. And spot gold, nonetheless, is catching a little bit of a bid, trading up by nearly 2% this morning. We do have silver higher as well. Silver is up 2.5% today. That's up about 48 cents on this trading session. So traders can also watch for a pop in the SLV today, which is a good proxy for silver. And you can see SLV now trading at around 18.56, closed at 18.21. But you could just see the little bit of a stronger move in the marketplace. Now, oil is lower today. Oil is down about 60 cents at the moment to 102.62. So oil is a little bit lower on the session. We take a look at the USO. Oil soared on Friday. You could see that it has come off those highs. And again, it is just very, very extended, very, very overbought here. I really think oil has limited upside here at these levels. But nonetheless, with the geopolitical events taking place in the Middle East, you also have some storms starting to brew out in the Atlantic. Don't expect too much of a decline in the oil market just because of the other factors that are out there, weather and geopolitical events and conflict in the Middle East. So again, that's something that we have to keep our eyes peeled to going forward. One stock we're gonna have to watch today for some morning activities, Deutsche Bank. Ticker symbol is DB. It's catching a pretty good little gap up. It's been an overbeaten stock, so I have to think with the European markets rebounding a little bit, this stock could be due for a little bit of a bounce. So it's already caught a little bit of a bid. I'm not sure if it's going to go much higher than here, but that was one I was going to keep an eye on this morning to see if it didn't do much. Maybe it would be in store for a little bit of a bounce or a bid. But right now, it's already moved up quite a bit, and it looks like it's stalling out already. But one that could be in play today, Deutsche Bank could have some activity. Something else that traders are going to want to watch for very closely is going to be the bond yields on the 10-year Treasury note. Okay, so keep an eye on that. That's going to be very, very important. Right now, it looks like we do have the 10-year bond yield trading around 2.7%. So this is going to be very, very important. You can see on Friday the 10-year bond yield making a soaring move higher, and that really is going to hurt anything in the utility sector, any of the home builders, any of the mortgage REITs. That certainly will hurt them. Ultimately, I think yields will go higher, but again, it did have a big push on Friday, so maybe it needs to stall out a little bit or something of that nature. But you can follow the bond yields by watching the IEF. This is the Ishares Barclays 7 to 10 year Treasury note ETF, and when this goes down, it means that yields are going up. So again, that's something to watch for going forward. If this ETF goes lower, trades lower, that means that yields are trading higher, and that's a good way to follow it. Also, traders can just watch the TLT. If this goes down, it means that yields on the 20 and 30 year or 20 years up are going higher if this goes down. So again, it's a good inverse relationship, and it works pretty well for those of you that don't have yield charts. If you have a yield chart, that's fine. Just follow the yield chart. One last thing that we want to cover going forward is that I believe this is the start of earnings season. So after the closing bell, I believe Alcoa will be kicking off earnings season. They'll be reporting after the closing bell. This stock has just been beaten down to a pulp since its last earnings report. So there's always a chance it could get a little bit of a bounce, but it's not really a market-moving stock like it was years ago. Right now, I think Alcoa is just based more so that we can follow when we're going to really start getting more and more earnings coming out. Later this week, we'll get the earnings of the financial stocks, J.P. Morgan and such, and that will really set the tone going forward. So just realize earnings are about to start being released, and we'll see how the market did, especially with the strong dollar that's been in place recently. All right, I'm going to leave it here, short and sweet today. I want to wish you all, I hope you all had a great weekend, and welcome back, and I'll see everybody on the charts. Take care, everybody. Have a great day.